Hey everybody, welcome back to the tax show for people who owe. I'm Dave.
And I'm Phil.
And today we're talking about a lot of calls we're receiving regarding payroll tax debts and how the IRS has changed their approach and a more aggressive approach to how they handle this. So Phil, what have we seen recently? What changes have been made by the IRS?
So not much has changed under the law, but I think a few factors play into why we're seeing this now. One of them is all the deferrals that a lot of businesses took in making those federal deposits. Secondly, we feel like the ROs are finally being more proactive and actually knocking on doors of taxpayers to make an effort to collect these overdue payroll taxes.
You bring up a good point because they've paused door knocks on a lot of small businesses and homes for quite a period of time. When did this start?
Just a few months ago, I think, and we really see it come to fruition where literally clients are calling saying, I got a knock on my door and a business card was left.
So the ROs are coming home to roost, could we say that?
I think we can safely say that.
Okay, so let's go back to payroll taxes. Why is there so much attention on payroll taxes versus individual taxes in the road?
We have a voluntary tax compliance system, David, and a big part of that is trust, right? So not only are we dealing with the government's money, now we're talking about employees' money. So if I were to employ 5 people, I'm responsible for making those federal deposits on behalf of them. They see their paycheck, they see the deductions, and they trust that that money went to the IRS.
I'm putting all this together. So what is that penalty called if you violate that trust?
Trust fund recovery penalty, David.
Trust fund recovery penalty. So those 5 employees are going to be filing returns, claiming refunds from the IRS when the taxes haven't been forwarded to the IRS. Is that why?
Exactly. And the IRS will honor those claimed withholdings.
Oh, good.
Which is good, but now IRS is left with the bill, right? And so to make sure they upkeep this sense of trust in the tax system, they go after pretty hard these business owners who failed to make the deposits, whether for honest reasons like paying next month's rent and keep the business afloat, or more nefarious ones like buying a Lamborghini and benefiting and just reaping all the rewards themselves.
So Phil, you mentioned that the law hasn't changed, but we've seen the enforcement change. Talk a little bit about what that looks like.
So great question, David. What that looks like today is that there's a lot more scrutiny around the use or misuse of these funds, and there can and often are referrals to CI, which stands for criminal investigation.
Oh well, not good. So if you do have a payroll tax issue and you're afraid of potentially getting a door knock or even a referral to criminal investigation, please download our tax app and reach out for help. We specialize in these more aggressive tax collection cases, and we'd be glad to help you. That wraps up the show for us today, everyone. Phil, any last words?
As usual, do something, especially if you owe payroll taxes.
Great point. Thanks for joining us today, everyone. We'll see you next time. Hey, everyone. Thank you for watching today. Please be sure to like
And subscribe.
so you are up to date with all the information you need when you're taking on the IRS.
And as always, do something.